Okay, now we're live. So, uh, what I'm going to do here is I'm going to use TradingView.com as a my charting tool, my charting software. It's free. It does have some limitations in the free version. You can pay a little bit if you want more, but generally for forex trading, it's not required. If you're going to trade commodities or something like that, where you need real-time prices, you're going to want to go pay the $25 a month, or I think it could be 40. I don't remember which it is, but you're going to need extra access in order to get the real-time prices for those other markets. So anyway, I'm you can find me there at richard.shoemake. Let's see what happens when I go there. Yeah, so there's my profile. There's my old pic when I think I turned 40. And that's me smoking a cigar, my 40th birthday. So anyway, you can find me in my profile at tradingview.com/u/richard.shoemake if you care to follow me on here. So anyway, you might find it interesting some of the calls I've already made in the past. I honestly have not gone through, tried to track how accurate some of these calls were. That would be interesting to do to see how well they came out. Some of them are quite old. Some of them are not as old. But anyway, please feel free to leave comments on these as well. Leave me your opinion. I see somebody here. Some people left some comments for me on my chart. Yeah, it's interesting. I guess somebody they're really questioning my call. I made a call some time back that silver will eventually reach. Let's see. I don't know if this is it, but anyway, I called this as the bottom for silver um, relatively recently. So last September, I think we hit the bottom for silver. So I believe we're on the uptrend at this point for the foreseeable future. I believe we may see double this price. Um, I think as it stands, this is a total sidebar, getting off into the weeds. But anyway, take a look at these if you like, if you have time. Maybe there's something of value there. Maybe something you'll find interesting. Anyway, just to give you an idea of um, how I trade these days. I've used different methods, but how I trade these days typically involves channels, and these are human drawn channels. These are looking at the chart, trying to find areas of support and resistance, which seem to indicate that there's a channel forming, and you'll find that there are potential channels all over the place, and at different widths. So if you turn this slightly, you might find that there's another channel in there somewhere, but it may not cover this time period. It may not operate well. Go ahead and click on this. It it may not operate well within this broader channel that I've got drawn. So you could parse a channel out maybe out of here from this low to this high, and on a smaller time frame. Maybe this is the 15-minute chart, and on the 5-minute chart, you'll probably find that you could draw a channel from here to there, and then go sideways for a bit, and then go from here to there, and then go sideways for a bit more. So this is illustrating the concept that there are channels within channels. It's part of the fractal nature of financial markets. and that was Benoit Mandelbrot, I think his name is. I think that's how you pronounce it. Um, so he was the one that first apparently discovered or at least applied fractals, fractal math, that kind of thing to the markets, and found that they did exhibit fractal um, properties. So anyway, so back to the the idea that my general idea for how I approach the market. I view it as channels within channels. So as I was trying to say earlier, you have um, you have a channel, I'm sure, from here to here. I don't know if you can see my cursor very well, but yeah, I guess you can. So you'll see that a lot of times here in the middle of this broader channel and these other channels, you'll see support and resistance there. And often, not, let's say often it will show support and resistance. What happens sometimes is that, well, as you see here, the price will bounce off from the extreme of this channel. It'll bounce up and it'll hit the middle point. It'll come back and find some support at the other side of this channel, shorter term channel, and it'll continue on to the other side of the channel. And then now, as you see here, you notice that this is starting the week of January 13th. Well, we can take a look at that and see how that did. As far as this little prediction here goes. But for now, you'll see that this there's a right here beginning the start of another channel, and if you use that as a starting point, in other words, when you draw the channel, there are going to be two circles on one side and one circle on the other side. Not necessarily the two on the bottom and one on the top. It could be two on the top and one on the bottom. You'd have to look at the market and see what it's telling you, basically, as far as how to draw the channel, what the support and resistance levels are. So basically, let the market tell you. Okay, we're not going to impose anything on the market. We're not that powerful. What you want to do is discover what's already there and then take advantage of it. Okay, so it's kind of a judo approach. Go with the energy of your opponent. So anyway, so that's the idea, and you can see that since we're at an extreme, it doesn't, in this case, it didn't go very far past the end of the channel before it came back in, and a lot of times that's going to be the case. You'll see here it kind of poked pretty far out, but then it came back in past the midpoint. And really what it did is it found support at the last point of resistance, which is often the case. So, some people can just use the price alone in order to make their trading decisions. But sometimes the indicators are really good for acting like, when you go bowling and you put the little guards in the I forgot what they call it in the bowling alley with the two sides where you want to keep the gutter, where you want to keep the ball out. These you put the pads in there so for little kids so the ball doesn't go into the gutter, and this is kind of like that. So this is a way of parsing out price in such a way that you can make good buying and selling decisions. And without having to just eyeball it to decide what to do. So in this case, you can see I'm just using channels purely. However, what I often do in real life is I'll even sometimes add the moving averages, the 20, the 50, the 100, even the 200 moving average sometimes, just to help me decide if it happens, let's say that the price happens to come down to this point, but it doesn't go all the way to the end, and I'm trying to decide, okay, is this really the bottom for this and I want to get out now, or is it going to go on and go down to the edge? Because usually it goes to the edge when it's that close, but sometimes it doesn't. You can see here after it topped on this channel, the gray channel, the top of the gray channel, it came down here, but it didn't touch the side. It came really far, really close, but it didn't touch the side. It came back up, touched the top again, and then it just kind of traversed kind of diagonally there, somewhat horizontally, but it still touched the side basically. Even though there's a little gap there, you have to be astute enough to realize when maybe your channel could have been drawn slightly better, because sometimes you'll find that when you initially draw the channel, all you have is this information here, and you can see that if you extend this line, it goes here. The price does find support and resistance along that line as well. So this is a good indication of anyway, it's a good illustration of how a channel does provide predictive indications as to what the support and resistance is going to be in the future. So anyway, that being said, sometimes it doesn't go all the way down. Sometimes you might want some help to decide whether to get in or get out. Here, once I saw that green bar, I probably would have just closed it. So if you go on that basis, this could have been, if you just take the top of that channel, if you're confident that that's the top, and I think you would have a fair degree of confidence in that given the long wick, and that it does seem to fit. This one's a little bit, you got some good indications here that this is the right channel. Even it's the top of that one. It extends here as well, but you might have some question as to whether that's really the top. You might want to just hang on to it and wait for it to come back, double top. I would have sold it and then closed it here, just for us. It's a scalping opportunity when it comes back up. I would not have bought here probably. If you're feeling especially talented, then you might do that, but your odds are just as likely that it would have probably gone on down here, although you're only risking, well, you're risking about 14 or 15 pips there roughly. So not something I would really want to do. I would just wait for it to hit the extreme again, which it did, and then at this point probably sell it once you get that strong bar. Although, having seen this green bar already, I'd be pretty convinced that I was right about my channel, and I would go ahead and sell it again. And I wouldn't probably wait for that red bar. So at that point, you're looking at about 90 down to 62. So 28 minus whatever it costs you for the trade. It could be, let's say, 5 pips. So that would be on this currency pair. So that'd be 23, which is pretty good. And then from here, for sure, you see the bounce off of that. From this point, for sure, you could buy in and then ride it on up. So looks like that's a pretty strong bar, as you see. And based on that, it's 87 going up to there. So you're looking at right there. It's like 55 points. So so that would have been, really, that one trade here would have been enough to give you a nice day, and you probably could just call it a day at that point. That's what I would do. And then when let's see, this is 17:45, so we're almost 6 o'clock. Which about the Asian session. So the opening of markets is often a turning point for the various currencies, especially this one. as it pertains to the Asian market anyway. And you'll notice that right around that time, it's turning around. It's even preparing here, and this is a good point to sell because it did exit the channel. You could call it a breakout if you wanted to, but it does come back in, and it often does. You'll see here that was pretty large, significant breakout. Okay. At this point, you might not want to get back into the market until you see something like when it pops back in like this. This is a strong bar. It's got wicks on both sides, and it's a very strong, healthy bar, especially with the volume behind it. I guess it's not behind that particular one. It's behind this one. But this, to me, indicates that it's coming back into the channel. So when it does that, that's to me indicating that it's probably another good buying opportunity right there, because that's all pretty strong as well. So anywho, that's kind of how you have to view these. Once it gets outside of these extremes, that's kind of how you have to view that. You got to be cautious about jumping in these cases. You wait for it to come back in before you make your move. So in other words, when it came out here, I wouldn't really have done anything until it's fully back into the channel. So anyway, that's just a few little tidbits and nuggets, I guess, over related to my my trading system. This kind of gives you an overview as to how I view the market and what I look for. I go to a higher time frame. I build this black channel, and then I'll look for channels within that cross from one side to the other. So that's kind of how I view that. You can combine, if you like, you can combine additional indicators. You can see that here are the what do you call it? Pivot points. Pivot points. A bit more coffee today, I guess. But you can see here, this works quite nicely. Predictive, really almost to the pip. And yeah, it did exceed this channel that we've drawn. But this strong bar here is a indication that we're going to come back in the channel, and this just reaffirms it here. So if you're not quite sure about that, that's fine. You wouldn't want to get into a trade at that point if you're not confident about that. But you can see that if you were to take this as a buy signal, that's a lot of volume behind it there, quite like what was on the other one. It would go, it would have been a tremendous opportunity for you, because it would have crossed all the way to 143.85 from 142.20 basically. So that's over 150 pips right there. Then another good selling opportunity right here, and that could have gotten you, let's see, let's say around 143.5 roughly, very roughly, and then down to the middle point, and then when it starts showing some bullish behavior there, it's confirmation. It's a good time to get out. So it's 142.50, so you're looking at about 100 points right there. And this, I don't know what time frame this is, but it's probably the 15. Oh no, it's an hour time frame. So longer term trade, but well, it'd be worth taking that one for sure. You see that's on the 15 time frame as well. Anyway, that's kind of how that goes. So just to actually put one into kind of go through a real-time trade type of thing. This is where I'm where I'm currently at, you can see that, like I said earlier, I use moving averages sometimes. I often ignore them, but you can see the channel the black one I've drawn, it's started way back here. So just to give you an idea, this channel was established before. It goes outside quite a bit, but you can see it's also further established here, there. So just because it goes outside the channel, it's not necessarily, this is not necessarily indicating that I've drawn the channel wrong. You can see here as well that we have a floor, we have support. This is where it came into the channel. And if I were to back further out, you can see there was probably another channel that went from the bottom up here before we entered to this sort of somewhat horizontal channel. So you could probably draw another channel going diagonally here. In fact, you can just do that just to prove the point. So you can see there that there's another green channel that I've drawn here. That's because, back to our channels within channels concept, that there's a large, broader channel within that. So just let's go along that line of thinking for a bit. That was a 15-minute chart. You can see here it looks quite busy, but if I shrink it down, now some of these get kind of twisted looking, these channels. It's just the way that the tool draws them. It's kind of messy and not real good, but anyway, you can see that the channel here is probably used here as a bit of resistance at that point. But the point is that this is a long-term channel on the 4-hour chart. You see that it finds a good bit of resistance, and it likes to kind of ride the channel a bit like a skateboarder. It'll go on either side, and it just rides it, hugs it really well, and then it launches up into this channel. So you're kind of establishing a rough support here, and then it goes up and tops out there, and then that kind of gives you the top of your channel. It comes back down here and shows support at this other channel, and then you have your channel basically